hold music. You want to avoid it, and so do your customers. So say goodbye to hold music and hello to faster, smarter support with Salesforce. Make service more personal and agents more productive using built-in trusted AI. Then watch costs and wait times drop and satisfaction soar. Support customers in a whole new way with Service GPT. Learn how at salesforce.com/service GPT.
On freight markets, we have the weekly market update. March volumes arrive on schedule. Capacity remains loose. The brokers are saying that ample capacity is readily absorbing the contracted volume uptick. FreightWaves releases Vnomics miles per gallon index in SONAR. And we have a radio recap, quotables from FreightWaves' second show. For the other headlines of the week, Teamster Locals no votes throw wrench into UPS's contract implementation. Cost blowouts cause profits to plunge at CMA CGM. Regulatory hurdles threaten to slow blockchain development in the U.S., and Harris Williams bankers explain why 3PL M&A will stay hot in 2019. I'm JP.
And I'm Chad.
And we discuss all these issues and more on this week's episode of What the Truck.
Redwood Logistics is one of the nation's fastest growing logistics providers, fueled by industry-leading technology and a passionate team of experts. From multimodal brokerage and dedicated truckload to third-party logistics and TMS consulting, implementation, and integration, Redwood Logistics delivers next-generation solutions for its clients and much more than a truckload. And we are visited by Daniel Pickett, Chief Data Scientist. Pickett, great to have you on.
Yeah, I'm excited to be here.
Well, it sounds like it. And you know what? It only took 57 episodes to bring you on.
I'm an acquired taste.
Speaking of acquired tastes, you've acquired a taste for Founders Brewery beers.
Yeah.
And you recently went up there.
Yeah, I got to go to speak at a supply chain conference in Grand Rapids and went down to see the good people at Founders Brewing and really enjoyed the Canadian Breakfast Stout, which we happen to have here locally. So
Wow.
Limited release. It's a 11.6 ABV Imperial Stout with chocolate, coffee, and maple syrup. That's where you get the Canadian.
Okay, then.
And what did you pour for us, Chad?
Well, from the tap house over there at Freight Alley, we have Transmigration from Orpheus. Oh my gracious, Transmigration.
Awesome.
Should we say what the ABV is?
Let's
Just keep
curious listeners can look it up on their own.
All right. Well,
yeah, let's get into it.
Well, you know what? So I have a question for you guys, and I don't know if but you know, like guys, year over year, remember what a hot year 2018 was with just everything. We just talked about the aberrant nature of it. Well, with rates as low as they are right now, with tender rejections as low as they are right now, like how would you compare? What do you think? How do you think right now volumes compare year over year to last year?
I mean, yeah, if in a low rate environment, low tender rejection environment, you would assume that that's being caused by low volumes, but it's really not.
I asked the wrong guy.
Yeah.
No, I think JP nailed it on the head. The other thing you've got to remember is that a lot of your big carriers got really healthy contract rate increases last year, and that sort of caused this kind of wild disruption in 2018.
Yeah.
So you do have kind of the same
answer.
volumes, and your big carriers are sticking to their contracts a lot more than they did this time last year.
Volume's actually slightly higher right now, which I think would be a surprise to our, maybe even our well-informed audience.
Yeah, I think it would be a surprise just because, especially if you're on the asset side, right? Like if you're an owner-operator, it probably feels like a down cycle already in the freight markets, just because the spot markets have been a little bit starved of freight. There's a lot of capacity that small and mid-sized carriers added. I've seen numbers quoted as much as 11% over the course, but basically over the last 18 months. I mean it's supply and demand are definitely imbalanced.
One thing that is interesting is that last year, as a result of the high volumes, that 5.4% of the total market volume, at least in April, was coming out of Los Angeles and Ontario, those two very large markets. But this year, it's actually been 8%. It's been really carrying things.
Yeah, and if you look at inbound, the biggest sort of inbound growth markets on the West Coast are sort of secondary warehouse districts like, Stockton, Modesto, Phoenix, Fresno. It's a lot. It's interesting because, our sort of operating thesis is that the warehouses in Ontario and LA kind of got clogged with pull forward freight from the tariffs.
Right.
That has to be digested and pushed into the network, and it's created a flurry of regional moves that are kind of artificially driving national volumes higher. And it's kind of amazing to me because a lot of people talk about, okay, what are the tariffs actually doing to the economy? How bad is it? We're still having these huge trade deficits with China. So how much is it actually affecting? But one of the things that has amazed me is the extent to which the tariffs have disrupted normal freight patterns and effectively decoupled freight volume from GDP.
Yeah, 2018 was a really strange year, and a lot of that, early you had both shippers that got kind of burned in 2017. The end of 2017 was really brutal for shippers as your tender reject, your routing guides fell apart. Everybody went to spot. And that's when we got everybody missed their earnings because transportation costs, doubled or went up 30%. So in 2018, not only do you have tariff kind of fears that like we better get it kind of moved and fill the warehouses before we have to pay 25% on top, but you also had a bunch of shippers that got burned at the end of 2017, and everybody like herd mentality had the same idea. I'm going to move things early this year, and summer 2018 was just it was hot, it was long. It really was just an incredible year for some of those smaller guys running the spot market.
Yeah, everybody was responding to the capacity crunch, such as we were covering for the first half of the year. But you know what? One thing that's an interesting thing happening right now is that over the past 2 weeks, that West Coast activity, it seems to be dropping, and it's dropped 21%. According to our SONAR data. So if that's the Chinese New Year plays into it, it's over.
Chinese New Year plays into it, but there are also, that's kind of a seasonal issue that always makes Q1 comps kind of wonky because it's a moving day.
Yeah, it moves relative to our calendar. Yeah.
But if you look at Chinese PMI, it's also fallen apart. If you look at container rates from China to the West Coast, China to the East Coast, they're taking a hard turn down as well. So I do think that the demand side is a little bit softer than it looks.
Okay.
If you're a regional carrier in California, demand probably still feels strong. But I think that there's an end in sight to that.
Yeah, and don't forget that there's a little bit of a spillover effect from what's really been weak coming out of China is Europe, much more so than us. And there's a lot of increased capacity there because the volumes to Europe are suffering more so than the volumes to the US.
Europe's in a pretty bad place right now. It's just today Draghi said that they're going back into quantitative easing. What were they projecting for GDP growth for the European Union? Like 0.1%.
Yeah, it's not good. It's flat. Yeah.
Yeah. So they're pulling all of the less effective every time they do it levers that they can.
One of the things about how, though, we are in a somewhat balanced market and that things may be trending towards tightening a little bit with the capacity is, I believe last week we reported that 82 of the 135 markets that we cover, were at high volumes, and now it's they've begun to increase. Basically this week we're reporting 75 of the 135. So, if I think those volumes remain elevated, that, we will begin to see things, capacity tighten in earnest, and maybe some tender rejections and rates go up. But I don't know.
Yeah, so every year since 2015, spot rates bottomed at some point in February. In theory, they should go up. I mean, if you're talking about 75 markets out of 135 are having increasing volumes, and what, like 65 aren't, or something like that. Like that feels almost like treading water in a way.
Fairly balanced, yeah.
So we'll see. We'll see. I mean, I think we're not that far away from the bust in the typical boom and bust freight cycle, and unfortunately, there are going to be carriers who exit the market, and capacity will contract just because the spot rates on a lot of major lanes are not really sustainable or profitable on the carrier side.
And speaking of different perspectives, you covered from a broker's point of view. They're saying similar to what we just said, that there is ample capacity out there. But what else from their point of view are they looking at? What's the kind of a broker's perspective, such as you were writing about, JP?
Well, I think that there are really two kinds of brokers. There are small brokers who stick to the spot market and just do that, and then there are brokers who are pursuing contract freight, large accounts with shippers, and so those people are aggressively. They're actually, I think in a really good position right now because they're, we've
all of them.
Well, the people like Echo, people like Arrive, people like Redwood, people that are big enough and have the scale to convince a large shipper that they have a network that can service their freight. Because essentially what's happened is with the rise in driver wages, basically the asset-based carriers have to ask for low to mid single-digit contract rate increases. But if you're a 3PL and your cost is the spot market, then you can actually undercut asset-based carriers and aggressively pursue contract volume. And pretty much all the brokers I've talked to have said that 2019 will be more biased toward contract volumes than spot volumes. That's what they're doing, and we'll see. I mean, I think a lot of it's interesting. I mean, a lot of shippers are realizing that even with factoring in a 15% or a 20% 3PL gross margin, they can still save money with a 3PL versus an asset-based carrier.
Yeah, I think there's a lot of truth to that. You've also got to remember, though, that a large enterprise carrier absolutely has a lower per mile cost than a small independent OO. And,
I don't know. I think that's true.
I do think that's true.
So you think there is a certain economy of scale in trucking?
Yeah, there is. I mean, they get better deals on fuel. They get better deals on insurance. They get better deals on the equipment itself. So yeah, they absolutely can survive at lower rates longer than a small carrier can. But what you see with a lot of these contracts is, you're right. You see the brokers getting into the routing guide as a contract.
Yep.
And you might see shippers kind of lean on the brokers during softer times when spot is low, but still keep some contract carriers in their routing guide for kind of that surge in middle of the year and end of the year.
Yeah, and I think the past 18 months has really, I think that 3PLs have performed well, proved their value to shippers, and shippers are realizing that they want to have options, they want to be flexible, they want to have different kinds of solutions in different kinds of situations, and everyone, few people have much confidence in forecasting what freight markets are going to do, and so having a 3PL in your routing guide is almost being conservative and prudent at this point.
One of the things that we are trying to bring to our What the Truck listeners each and every week is, a weekly market playbook. And one of the ways that we can help track that, through our SONAR data is, looking at fixed costs, operational things. And, this past week, we've been announcing that we have introduced this Vnomics data, And it tracks one of the major fixed costs of a carrier. About 5 to fuel is about miles per gallon, about 5 to 9% of the fixed cost. I think that's right.
I'd call it a variable cost because the more miles you do, the more fuel you're going to buy.
Oh, that right. Fuel being a fixed cost, but
fuel is a cost. It's absolutely a cost.
Oh, whether it's fixed or not, huh?
A fixed cost
Okay.
is, I would say, is your office. Maybe your number of trucks is kind of a stepwise, but yeah, fuel. More miles you run, more fuel you're going to buy.
Always
generally.
thought of it as a fixed
But
cost.
no, what Vnomics is really doing is a fuel efficiency coaching service, and it really is there to help drivers, incentivize them, gamify, and even reward them for doing behavior that is going to improve their mileage. Because if you're going to do some 6-digit number of miles per year, that's a lot of pennies if you can save pennies at the pump. So they do a really good job, and now we're taking that data and kind of reporting at the local market level what does the mileage per gallon look like in that.
And I don't know about JP. I am curious about like how you guys literally, take that data in and contextualize it and stuff. But even before we asked that question, I'm curious, like when how much have you been able to look at this data? Like, are there surprises? Are there like ways in which if you look at this data that like miles per gallon are sometimes surprisingly not as efficient as you might think, or surprisingly more efficient depending on when the data is, what day of the week it is?
Yeah. I mean, that's certainly true. I mean, weather drives it a lot.
Okay.
So, the two biggest things that drive kind of day-to-day change are going to be weather and then day of week. On weekends, you don't have traffic. There's just not as much traffic on a weekend, and mileage is, could be,
a lot
you
better.
You could get it. Yeah, you could get an extra, maybe half a mile or something per gallon out of your economy. Whereas on weekdays, you're going to suffer because you're sitting in more traffic and you're doing deliveries. You're sitting at docks.
So like Monday morning, Los Angeles during a downpour.
Miserable. Yeah. Snowstorm would be worse. Snowstorm's really the worst.
Really.
So this is what we mean by variables, right?
And of course, and obviously it's a variable cost because the price of diesel goes up and down.
Yeah, that's true too. Because I was surprised actually when I looked at some of the data this past week in Atlanta. It was like miles per gallon efficiency went down surprisingly on a Sunday. And one of us, I think it was Zach, one of his explanations was that, well, a lot of trucks sit and idle and park a lot on Sundays.
And potentially
so
that is an issue. So Atlanta, great place to be on Monday morning. So you could have a lot of trucks arriving and idling. So there are kind of these interesting trends in each market. And we talked about the traffic problem. LA doesn't get snow really, so you can compare LA to other places that don't get snow, like El Paso. El Paso doesn't have nearly the traffic it does. So El Paso's weekday to weekend spread very small. LA's weekday to weekend spread very, very huge. So
I'm curious too about sort of like geography or maybe topography.
Yeah. Does a more mountainous area hurt fuel economy?
Yeah. What does that look like?
It does. It absolutely does. And so as you get into kind of the areas that have no flat roads anywhere, you will see a mile penalty or maybe sometimes more.
Interesting.
Crosswinds can be brutal too. I guess these things are somewhat obvious.
Crosswinds, headwinds. It's really interesting. What about do we have any sense of how this has changed over time? I mean, in theory, right, the government wants trucks to be more fuel efficient each year.
Right. And you do have regulations to that effect.
Sorry to interrupt you, but one of the other sort of regulatory priorities has to do with emissions,
right,
which actually can sort of there's a sort of a balancing act between emissions and your nitrates and all that kind of thing versus MPGs.
Yeah. And I mean, you're going to get what you measure. And so do you measure things at the per mile? Do you measure things at the per gallon? And this is sort of where your refiners, your OEMs can kind of start to play games with how you measure those regulations, because while the trucks can, in their EPA tests, get better mileage, the fuel mix that they're actually buying at the truck stop may have, may be blended slightly differently. You're going to put the the most favorable thing in when you have to go do the EPA testing, but what's actually available out there at the pump is very different, and it differs by state too. So
that's interesting.
Yeah,
And
gasoline is not diesel is not it's more of a cocktail than it is a molecule that is homogeneous across the country.
A Molotov cocktail. I don't know.
Yeah, but and also I would think that like the skill of the driver has a massive effect on MPGs. I mean, I follow,
it absolutely does.
I follow certain drivers on LinkedIn and Facebook who regularly post about their MPGs, and they might have like kind of a basic aerodynamic package on their trailer. They have a new truck. They have sort of pedal coaching software that gives positive feedback to their controls of the truck itself.
Right.
And I mean, some of these guys are able to achieve, 10 MPGs like on a regular basis.
Yeah, that's really impressive. And every once in a while, we'll see a trip that's like some of our highest mileage trips ever. It's on Christmas Day. They're rolling down a mountain bobtail to get home. And somebody had a 14-mile-a-gallon trip. Oh my God.
Right.
Well, it's it's also that you point that out, JP. It's one of those interesting aspects of, like this is the new era of trucking. This is what can make trucking cool and fun. It is nerding out in a sense on the data, helping the data increase your efficiencies. And, one of the things, Pickett, we have you here, and you are a data scientist. You've been here from the beginning. You've put together this team. You guys have been bringing in all of these data points, man, as we have just developed this SONAR SaaS platform. Is there a way for you to nerd out briefly in an interesting way for our audience? Like, what's it like bringing in this kind of data?
And working with your team and asking questions and even trying to brainstorm and figure out like which questions should we be asking of this data set.
Yeah. I mean, sometimes you get a data set that's fairly straightforward, but really most of our data sets, they can be used for multiple things. And so you can start to figure out, like we've been talking about miles per gallon, what that data coming in looks like is they had an engine start, they had an engine off, here's how many miles per gallon, here's how many miles were consumed, here's how many gallons were consumed, here's how many miles were traveled, here's the start and end point. But then you can start to, from that, see things like volume, compare that to things like weather, look at the cities they were in, the road segments they traveled on, find specific road segments that consistently punish mileage. So
even like detention times.
You could with detention times.
If you're running
if you've got full telematics, then detention time is, if the truck is running, is going to.
So in that case, is it not even just about scraping and cleaning so much as we say, but is it also like addition? Is it like you have to kind of write?
Yeah, I mean, you think about the raw data that comes in is almost like a pantry full of ingredients, and you say, well, what are we going to cook today? Well, what do we have in the pantry? So you kind of go in there and there's,
interesting.
Unfortunately, we don't have a huge cookbook that says, do this. So we'll kind of, work with the market experts that are, they're publishing articles on FreightWaves, they're writing the daily pickup stuff, and kind of figure out what are they hearing, what do they think is interesting, what questions do they have, why is this market heating up, or how are people going to optimize their network, and then you kind of go into the pantry and say what ingredients are here, what ingredients do we wish we have, and we'll kind of send our data acquisition group out to see if they can source new ingredients for us. So,
wow, yeah, that's interesting. And that was like a bit of a nerding out without getting too granular, right?
I mean, I would even ask you to follow up, like what kinds of conversations have you been having with your team this week? What are you guys working on?
Great question. The miles per gallon stuff has we've continued to kind of follow up on that, because one thing that bugged us is that we know that new trucks are supposedly more fuel efficient, but when we look at the last 3 years, we see that the average mileage has gone down each of the last 3 years. That should not happen. That's the most. When you get a result that you're like, this is not what I expected, then there's kind of a peel back the layers of the onion game that happens. So that's been one that's been big this week.
Right. Now, that could have to do with sample size and the way that it's changing.
It could be. Fuel blend. 2018 was one of the wettest years we've ever had.
Interesting.
Running through water. I don't know if you've ever tried running through ankle-deep water at the beach. It's a lot harder than running on pavement.
It's one of the funnest things to do at the beach.
Well, and I would assume that, like, if the road is wet, that reduces traction by a certain amount,
and increases drag. Yeah. Reduces traction
and makes your truck have to work harder to travel the same distance.
Yes, absolutely.
Interesting. And I mean, certainly in Chattanooga, 2018 was drenched.
Yeah. It's been very wet lately as well. But yeah, so weather plays a part. You know, the mix of diesel that's happening plays a part. Like you said, sample size. These Vnomics guys, they're actually doing well, and new people come in and kind of
as the sample size grows, and it should approach the mean of the entire industry.
And that's kind of what you see is that when somebody enters the sample, they improve to a point, and then you've hit kind of the mechanical limits of what the vehicle can achieve. But
that's really interesting.
Yeah.
And it's so cool that you have. I mean, how many people are you guys up to now?
There's almost 20 on the data team now. I think if you include everybody that does some sort of engineering or science or research or
Wow,
lots of scrubbing to do.
Yeah. People that clean, move, machine learning, classical statistics.
Awesome. All right. Well, Chad, you just did the second week of FreightWaves Radio on Sirius XM Road Dog Trucking Channel. There's I don't know. I was on it for just a little minute, talking shit about
and it was
Tesla.
A very entertaining part, I must say.
That's always fun, and it's there's a rich data set to work from there too.
It's a lot of material. A lot of material.
Yeah.
Oh yeah, it's about Tesla and Elon Musk. Yes, those were the early days of What the Truck, man. Right? We enjoyed going back and forth on that. Yeah, just we just to let our audience know that Sirius XM has in fact picked us up on the Road Dog Channel 146. Man, they have some great content on there all the time, and we are just happy to be a part. And just wanted to we are there coming live to you on Saturdays from 3 to 5. It also plays at other times of the week if you can't catch it then. But if you have Sirius XM, check us out. We talk to all kinds of cool people, and this coming week, we're going to be talking about besides this content is unique because we really hit the headlines. We focus on headlines,
and people are calling in. You're talking to everyone.
I mean here on What the Truck, we cover these headlines, right?
Yes,
so what's different about the radio show from 3 to 5 is we bring in all kinds of market experts from all around the industry. We have these conversations.
You talk to everyone from transportation equities analysts to drivers.
Yes, we do.
On the same show. That's incredible. I mean, it's so cool.
Right. It is unique content for what's on.
So many different perspectives on the industry.
We had David Hall, partner at with the Steve Case Group and the Rise of the Rest group, and
venture capitalists.
He was talking about last week. He was talking about there's really new technologies that are coming along, and he said one of the big things that we're looking at right now is just that there's this major confluence of major trends right now, and because you're seeing this powerful consumer demands for goods just fall on people's doorsteps right now. Right. And you're also seeing a lot of pressure that's being put on the traditional methods. And then he was like, this is exciting to VC places because you've got these new emergent technologies in autonomous transportation the industry is becoming data driven. And I just, wanted to focus on the data aspect here as we have Daniel Pickett on with us today. our chief data scientist, and it's just it's exciting. You know, by the we will be having on the show on tomorrow. Saturday from 3 to 5 we will have Tim Hines of Stay Metrics talking about what keeps drivers working for their company. Will O'Donnell of Prologis talking about current technology trends. And from Business Insider, Rachel Premark talking about some issues.
Premack, yeah.
Oh, Premack. Yes, thank you. And she will be talking about some of the issues in the industry that have caught her eye of recently. So that's just some exciting stuff happening. What are some other cool headlines, man, of the week that we are going to be covering here?
Well, I think we have to talk about Mark Solomon's article about all of the infighting among the UPS Teamsters. Is
it that time of year again? It feels like
it's actually not. It's they're still fighting about the contract that was kind of approved over the objection of the membership last summer.
Right.
Yeah. Give us some context, JB, because if you literally if you don't know much about this and you try to read this art, it is confusing. It's complicated.
It's complicated. It's convoluted. I mean, labor negotiations and union politics are, notoriously Byzantine and difficult to, follow if you're not, kind of
the percentage of votes and which Teamsters working against which Teamsters.
I just wanted to say, I just wanted to plug Solomon really quickly, though. He's lived in Atlanta for decades. He is extremely plugged into UPS, both on the corporate side and the labor side. I think that he is probably one of the best riders on kind of the UPS, USPS, FedEx, XPO, Amazon kind of tetrarchy.
that dance that's going on.
Exactly. Yeah.
Yes, we are lucky to have him on. It is great coverage.
He has the best sources of pretty much anyone in transportation media on that sort of the evolution of parcel delivery and that kind of thing, sort of global logistics. But yeah, what it comes down to is that there was a very controversial provision in the labor contract that would establish 2 tiers of compensation for drivers based on seniority, with senior drivers getting paid $6 an hour more than junior drivers.
That was voted in October.
54% of the membership voted against it, but the Teamster leadership approved it anyway.
And they were able to get away with it
because there's a loophole saying that if less than half of the membership votes, then they can essentially approve anything they want.
They didn't have a quorum.
Exactly. And so
this is what I mean about how it can get complicated.
So there's been a lot
fast.
of blowback. There's actually a splinter group inside the Teamsters called the TDU, the Teamsters for a Democratic Union, it's sort of like grassroots membership led. That's obviously, I would think to the left of the official Teamsters stance. That's basically putting, and I think, but to the left might be the wrong way of putting it. I mean, I think they probably have a legitimate critique of the opacity of Teamster leadership decision making, right?
Sure.
And we could go into the history of the Teamsters, but that's neither here nor there. A very large Detroit local and a very large sort of was it central Pennsylvania local and overwhelmingly rejected the riders and the settlements that were attached to the last contract. Essentially the contract that was approved in something June or July of 2018 still has not been implemented because of the delay of these riders. And the play here now is that the TDU is trying to stir up so much opposition to it that and essentially force a renegotiation.
I mean, yeah. If you could follow all that, I mean, UPS they almost went on strike, and then UPS was able to strike a deal that did not lead to major disruptions right into the retail season. And I guess this is what is happening and continuing to go on. It would be apparently there's a delay after negotiations are ratified, in which it would take a while to see these settlements and now they're delaying them further.
Yeah, and the automakers unions, went to these kind of two-tier structures, during the last kind of auto crisis, and there were people that said it saved us, and there were people that said it was a slippery slope that just put a lot of power, kind of showed the corporations that we will blink at a certain level, and so
Right.
I can understand the opposition, even from people that might have been in the senior class said. It's a slippery slope to kind of start doing these two-tier structures.
Well, yeah, because then all of a sudden, corporate wants the union to have a different mix of junior and senior people.
Exactly.
And
exactly.
we'll leave that up to you to figure out how to achieve it. But
Yep. And then we ratchet up how many years it takes to become a senior, what the grandfather in period is.
And I think the two-tier structure is a nod in the direction of the pressure that everyone is under with e-commerce and the 24/7 delivery cycle, such as it's developing.
Well, and I think if you think about the market forces that are putting UPS under pressure, most people, on CNBC, compare them to the most comparable other stock, FedEx, where you have a fleet of sort of independent contractor drivers. But I think the actual emergent disrupting force is all of the sort of crowdsourced last mile delivery startups who are being paid far less than even UPS independent contractors.
Sure.
And that's really,
good point.
That's, I think, really the force that will have to be reckoned with at the end of the day.
Not to mention some of the testing that Amazon and other
I was gonna say,
e-commerce
Amazon.
retailers are doing that. Hey, we'll give you $1 off your next order if you have it delivered to your office, where 10 other people at your company are having packages delivered tomorrow.
Yeah. And so it's exactly. And Amazon, has been disrupting LTL. They've assembled a massive fleet of Sprinter vans. They're clearly moving. I think they want to be the largest LTL carrier in North America, if not the world. And we'll see how that works.
Potentially, I think they're also in some ways cherry picking. They've done a really good job of knowing which loads they can, which last mile parcels they can deliver cheaper than what they're being charged by all their potential carriers, and then which ones they cannot deliver for the cost they're being charged. And they're kind of.
I think that this is what happened with XPO. The people they were using for postal injection, which is pretty easy to do, right? Postal injection is like we do the hard, we do the easy part, the long distance part. The part that takes the post office so much time to accomplish. We do that really fast, and then we dump all the pallet at the local post office, let them do the really expensive, labor-intensive, difficult
sorting
part
last mile.
And
dealing with, not home, but I need a signature. That's expensive.
Right. So it made sense for Amazon to grab that. They'll continue to do more of that. I think the only reason they didn't take all of that business away from XPO is because about a third of it was committed to sort of long-term contracts that they couldn't really get out of without a major lawsuit. So this whole space continues to evolve, and I think when you think about a labor dispute at UPS, it's not just about it's unions and it's corporate management. It's a dynamically changing industry with that where UPS's business model is being sort of outflanked in by different parties, and so I think neither the management nor Teamsters leadership really knows how it's going to shake out in the end. Yeah,
that's a good observation. They're fighting a war on a number of fronts.
All right. So our next headline is this is a fairly simple story by John Gallagher, our Washington D.C. correspondent. About
Jim Wilson, actually. It's a little maritime coverage. Yeah.
Oh, okay. Sorry. I was thinking about the regulatory blockchain stuff.
Right. Yeah, that he covered in the next
we're
one.
going to CMA CGM. Yeah. This is interesting. I mean, it's this story.
Can you summarize it for us?
It's a story. It's a song as old as time, in some ways, right? It's how
you can be profitable one year and not as much the next.
A steamship liner, any a steamship liner disappoints, misses earnings. Like that's really what it comes down to. And
Are we
it's
sure that's news?
And it's like,
and it's for a complex array of
in 2018.
reasons.
In 2018, when you had surging container volume, surging container volumes and surging prices charged by those containers up to record levels, you would think it's like. I actually read this in a Stiefel report about a different company, but I love this phrase. The stars, the moon, the sun aligned for an amazing quarter, but the dog ate my homework. And that's basically what happened. Like, unfortunately, CMA CGM, the Marseille French-based container ship line, was ultimately exposed to the same market forces that it profited from, and all of the. If you think about it in terms of like, this is essentially like if you're a truckload carrier, it's analogous to what a truckload carrier spends on purchase transportation, right?
Sure.
So all of the fees that they had to pay to charter extra ships, all of the fees they had to pay to the small feeder vessels that move small amounts of containers for them between minor markets so that they can be added on to the big mega ships. The fees that they had to pay to lease the container boxes themselves, all of those costs exploded. And yes, they had great revenue, but what was it? A 90-something% drop in 91% drop in profitability
in a single year.
Revenue goes up 11%, costs go up 13%. That's not. That's not what you want to have happen.
Yeah, and it's mostly costs out of their control. Like I said, like they're ultimately exposed to it's essentially it's the places in the supply chain where they have to purchase services were also in a sort of a bottleneck, and there's scarcity, prices rose on them, and which was cost for CMA CGM, and it's a variable revenue, variable cost model, and they're just like kind of surfing a wave. It's not that surprising. I mean, if there a few times I've dug into like Maersk's financials, like their full year reports and stuff, and it's incredible the size of these enterprises and the razor thin margins that they operate on.
Yep, it's a volume game.
Well, another story that probably doesn't require a whole lot of analysis, but it's just something that's been happening. And John Gallagher did cover this. He was at an event, the Blockchain Summit in Washington D.C., the 4th annual one, and there was a discussion about basically how in the U.S. the blockchain is facing some regulatory hurdles. And so, what are are you guys familiar with the story? What are the hurdles that we're facing in the U.S.? Why are we under threat with our development from other countries? What's going on?
Most political problems in the United States can be blamed on the inefficiency of Congress to provide clarity, and so that's what's happened in this case. And essentially, 4 different regulatory bodies are fighting a jurisdictional turf war because Congress hasn't said who's going to be in charge of this.
Yeah, and a lot of the jockeying for who gets to have jurisdiction seems to revolve around digital asset holding. So
yes.
So your crypto coins, your like the TEU coin, that's going to be a store of value more so than we've heard about track and trace, we've heard about food safety instances. Right. I don't think what's happening at the regulatory.
Yes, these are digital assets. These are cryptocurrencies, tokens that are supposed to have value, potentially accrue in value, or at least be linked to other sorts of commodities.
It's one of that's one of the problems that are muddying the waters. There were 27 different bills of the 47 that were introduced into Congress. 27 were just to fight the illicit use of digital currency.
Yeah.
Which is kind of weird because it's fighting the illicit use of digital currency. I mean, it's like, if you make
They haven't even gotten great at fighting the illicit use of paper currency.
Right. No, they're horrible at that.
God help them.
They're horrible at that. Well, it's like
Right.
you make something it's illegal to do, and it's illegal to do whether you're paying for it in U.S. dollars or Bitcoin or Monero or whatever. But and I think there actually may be an opportunity for regulators to attack things like Bitcoin in a way that you really can't with cash, which is if you want to like do illicit things, like obviously you're going to use cash, right? Not Bitcoin, which after all is on like an immutable ledger.
I hear you, but it's on that immutable ledger. So right now, what I've always heard people say, I've never had it done, but they say, well, if we tested the dollar bills in your wallet, most of them would have traces of cocaine.
Right.
I'm not a cocaine user, but surely I'm not going to get arrested for that. Are we going to get to a point where they say, Mr. Pickett, you own a Bitcoin that at one time was used in a cocaine transaction? I mean,
no, but what they can do is and this is how the FBI uses wiretapping and cell phone surveillance and stuff, is they do network analysis.
Sure.
So which wallets are interacting with whose other wallets,
right?
And
you
are there
can
patterns?
observe suspicious patterns.
Yeah,
Sure,
exactly.
Yeah.
Well, you guys
patterns in moving freight is kind of what we do.
You guys are kind of getting into the weeds a little
Yeah, we
bit.
are.
One of the things that they were talking about at this conference, though, was to lay out a national action plan for blockchain, calling for the government to do a couple of different things. Demonstrate leadership through strong public support.
That's going to be the tough part
at the highest levels of government, and also adopt a national action plan to coordinate all the stakeholders, as Perry Ann Boring said. And it's like basically they're laying out this approach. They're asking for a light touch with the regulatory approach. Good luck with that, right?
I mean, I think there are different moments where you can see change driven by either the White House or by Congress or by a certain bureaucrat that opens the door. I mean, for example, and I'll give you two examples. We've seen the FMCSA be all of a sudden, you replace some key leadership. All of a sudden, they're very open to revising the hours of service. You see Donald Trump very interested in drones and basically telling the leadership of the Department of Transportation, Secretary Chow, to basically do an in-run around the FAA to open up, drone licensing. So, I mean, there are ways that the government, a light bulb can go on in someone's head and they can create like an open framework that encourages innovation.
So you're saying there's a chance?
A chance.
I think they get bored with this one and
well,
move on.
Somebody's got to try to do something to move the ship ahead. You guys might be able to tackle this. Ladies and gentlemen, Daniel Pickett, beside being Chief Data Scientist, is also a CFA. He can talk you some financial stuff. And right now, we may need a little help with this one. You wrote this, JP.
I did.
Talking about, Harris William bankers explain why 3PL, I mean, talk about your industry jargon, dude, with this title. Why
I know,
3PL M&A will stay hot in 2019. Boy, do you sound smart.
Our editors want us to keep every acronym out of our headlines. This one had two. But I mean, if you wrote third-party logistics providers and mergers and acquisitions out in the title, that'd be like the entire thing.
How about JP? Since you wrote it, give us the overview. What's the lead, and then let's ask our market expert of sorts here what to make of some of it.
Yeah, so basically these two investment bankers at Harris Williams, which is an international investment bank and M&A advisory firm based in Richmond, Virginia. These two bankers in the transportation and logistics group, Jason Bass and Frank Mountcastle, offered to brief me on, essentially topics of my choice. And
yeah, it's a super cool article.
I was mostly interested in 3PL mergers, a consolidation in the 3PL space and what was driving it. And there were some, questions I had about whether the hot activity of 2018 would continue in 2019, whether we would keep seeing brokerages by brokerages and that sort of thing. I was also interested in there were things I didn't understand, and I'll give you an example. Things that were mysterious to me, and maybe Pickett can help give some color on this. But there was a deal done last year in 2018 that really opened my eyes to wow, something's going on in the M&A market for 3PLs that I don't really understand. And it was we heard, this wasn't disclosed obviously, but publicly, but we heard that Global Trans, a large 3PL, an acquisition hungry 3PL, had put in a bid for Transportation Insight, a smaller sort of tech centered brokerage that also had some a really interesting platform. They put in a 13x EBIT offer.
Well, before, let me back up a tiny bit here. Overall, the article is saying that we should expect this year to be a hot one in mergers and acquisitions.
Yes. There are
for brokerages.
Yeah, there are macroeconomic forces pushing both sellers and buyers to the market.
And I think the question is the why as well as the how.
Yeah.
Right?
Yeah. And maybe we should start there. So I can ask you, Pickett, what makes a 3PL want to sell?
Yeah, so you've got a number of forces in the market. At the right price, everything's for sale, JP.
Well, Pickett, I didn't know that about you.
Not my values.
Funny. But essentially, some of the 3PLs, what they see happening is that they built their business on hard work and being scrappy and being able to know just a little bit more about everybody else in an opaque market. Build up a good Rolodex of trucks, be able to find loads on load boards or get contracts, and
sort of get close with carriers and know kind of what they want to do.
Right.
Be their outside sales force.
And you can almost think about those brokers as like what real estate agents were in the pre-Zillow world.
Yep.
This explosion of data and visibility and transparency, it's not going to kill the broker, but it is going to radically change what kind of broker survives and what kind of volumes the best ones are going to do. So, these guys that are forced to kind of make the technology, make the the data investments in things like our own SONAR product, like DAT, like TruckStop, like having a data science and statistics and forecasting team. That's not cheap to do at grand scale. And so, these guys that have built a business look at it and say, hey, I can get a really great multiple for my business, or I can sink a bunch of capital and, try to grow this thing even more over the next 5 and 10 years.
Well, it gets hard because it's like and I think a lot of it has to do with people too, right? Like there are probably lots of brokerage executives who can build a $75 million business fairly quickly.
Right.
But getting to $300 million, they don't know how to do.
Yeah. Building a successful small business is a lot different than building a successful mid cap or
how do you? They've doubled every year up to $150 million, but they want to keep doubling every year, and they can't.
Well, and I suppose too, what's specific to 3PLs or brokerages, that lends itself to being hot in the merger and acquisition area right now.
I think the reason why buyers are interested in them is because there's a lot of private capital out there. Freight brokerage, for a variety of reasons, basically has a lot of potential for fast organic growth, which people love, and it's easy to stick these businesses together. So it's not like combining different shoe companies or something that make fundamentally different products. Like they're offering a service that's similar. They might have different networks. They might have slightly different business models. They might have different geographies, et cetera. But in theory, they can all be combined.
Yeah, that makes sense. And to get to that $7,500 million level you talked about it is kind of a sales culture and a can you be that middleman and successfully book loads culture. What gets you to the next level is starting to be better at that than the $75 and $100 million guys. Right.
Yeah.
Is it's data and analytics. It is getting the bigger contracts. Developing lane density. So
well, and you at a certain point, like even companies that bootstrapped for the first like 5 years of their existence might want growth capital to be able to, because now they're saying like, okay, to double revenue this year, I have to hire, 500 brokers this year before they know what they're doing.
Yeah.
Before they're making any money.
Through your network and in your local area, it's
before they're making any money.
Yeah, you may be able to find 100 really great brokers, but when you say, okay, now I've got to find 5 times that many, it's
and so it's like you're going to need cash to burn to do that, to bring those people in, churn a certain number of them and train the rest of them and wait for them to be profitable.
Yes, I do.
But one of the things that really confused me about covering deals in the 3PL space was we kept seeing private equity groups consistently outbid strategic buyers. And what I mean by a strategic buyer,
another brokerage.
You're a strategic buyer when you're either buying a business that's the same as your business, or it's a sort of a
vertical integration,
or an adjacent business that you want to get into, versus a PE group, a private equity group, which is a financial sort of holder and transformer and value adder.
They're not a forever owner.
They're trying to buy you, scale you up, and sell you.
And that seems to be.
And sometimes they just want to buy you,
now.
lever you up, and sell you. In my bond days, we dealt with some PE firms.
Yeah. And so, but I was kind of confused because it's like, why are they able to consistently outbid strategics? So like, how are they paying more for these companies that they're planning on selling them? Yeah. So how can you make a profit if you're always paying more above market?
Your article did a great job explaining it. A strategic buyer has to make this deal make sense. This deal has to hit my hurdle rate, my expected return on capital, whereas a PE firm is worried about the next deal.
Yeah, and so can you they explained sort of how they can pay a premium for a platform quality company, pay less for other. Can you kind of explain that dynamic?
They're going to be in it for a shorter time, and so your PE guys, who are essentially financial engineers, look at how Coyote kind of did this massive roll up in brokerage and said, "Wow, these guys were buying guys at 8x," and then UPS took them out at more than that. So their first deal to just get into this market and to find a good management team, a good platform to put extra assets onto.
Good technology, maybe.
Good technology.
They're willing to pay a lot for that.
Yeah, they don't have to. They can sell that initial piece for the same amount they bought it for, if they can go out and gobble up a bunch of little guys cheaper, hang them on that platform, and get everybody at that 14x multiple. If they're buying little pieces at the 8 and 7, and
Yeah, so the idea is that you buy like a $200 million company at 14x EBIT, and then you add on a bunch.
Right, you double or triple their size
at 7, 8x, and you sort of average down that entry multiple to where it turns out you've only paid 9 or 10.
Yeah,
and then but what you've done is you've taken all these sort of mediocre mid-sized brokerages that had no chance of scaling in today's modern competitive environment. You've given this awesome platform. You've increased the productivity of every broker. You've lowered their cost to acquire a customer. They're covering more loads per day, et cetera, et cetera. And now you sell it for the same multiple, but the company's 3 times bigger.
Right. I mean, that's exactly what they're doing. It's financial engineering.
It's called scaling, right?
That's financial engineering.
Yeah, but it was really cool, and I was really kind of like, I don't have a financial background. I've have some conversations with people in finance, but I was happy that these dudes from Harris Williams were like sort of. I mean, they really explained the logic behind this weird.
Yeah, why you can slightly overpay for your initial foray into the industry.
And I agree that the article does lay out a complex kind of array of factors in it's a fairly long article, but it does it quite clearly. Great job with that. Daniel Pickett, it is great to have you on.
It's great to be here. Thanks for having me.
For maybe possibly the longest What the Truck episode we've ever done in a single take.
We're practicing. Hey, we're practicing for the hour long, right?
That's right, because soon we're going to be on the TV, and so things are going to be great. But you know what? In order to get this under the hour, we better achieve our big deal, little deal JP, which we have not done in 3, count 'em, 1, 2, 3 consecutive weeks. So can we do it this time?
Oh God.
And Pickett, one last thought, man. It's so great to have you on, and may it not be 57 episodes until you're on again. Okay.
Sounds great. Sounds great.
All right.
Shoot for 54.
Okay, so take it away here, right?
No, you are.
Yeah.
You're asking me first.
Maersk CEO touts ease of booking ocean freight, putting freight forwarders on notice. Big deal or little deal?
I think it's a little deal. I think pricing and load matching are the easily automated parts. Ops is much harder.
REIT Colony Capital expands industrial portfolio in $1.1 billion deal. Big deal, little deal?
It's a big absolute deal, a little relative. I mean, it's industrial real estate $1 billion. Okay, I mean that's cool.
Warning UPS about excessive capex and buybacks. Moody's downgrades outlook to negative. Big deal or little deal?
It's potentially a big deal. UPS has to buy a lot of planes in the near future, and the market doesn't really like that.
Gates, a 16Z invest in Cobalt Metals, AI startup hunting ethical cobalt. Big deal or little deal?
It's a big deal. It's really interesting. It's potentially a way to use machine learning to interpret geologic data to find untapped sources of cobalt ore. Regulators make it easier to upgrade commercial driver's licenses. Big deal or little deal? Big
deal. The FMCSA continues to strategically reform burdensome regulations, and it's great to see.
UPS creates executive role to promote diversity and women in business. Big deal or little deal?
Big deal. It's a big company, and it's great to see progress in focusing on hiring women and having diversity in general. Change has to be intentional.
New logistics center to benefit Alaska Air Cargo Transfer Program. Big deal or little deal?
I'm going to say big deal. At least it will change the importance of the Anchorage airport. It not only becomes a gas and go facility, but a true hub and spoke network.
U.S. and China near deal, but it may not solve global trade problems. Big deal or little deal?
Little deal. I think that's the point of the story. Even though it may be a big deal for the markets if the trade war ends or subsides, it's going to be a process to solve the many problems that have now been created.
Awesome. How do we do?
Jonathan Smith, our new production manager,
didn't time the 2 minutes.
I was eyeballing it. You barely missed it.
We did?
No. We actually started after.
We might.
We started after. It wasn't. We didn't start on 58.
Yeah, you started at. Yeah, you started at.
We'll find out soon enough.
You started at 22 and finished.
I will
at 26.
say though that one of the funniest memes on financial Twitter is stocks rally on trade deal hopes, because there's a lot of bears out there who think that everything's the sky's falling and blah 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 and the central, Jerome Powell's fucking everything up, and there's not going to be a deal, and it's like Trump's tweeting to pump the market. What?
Are you allowed to drop the F-bomb in here? I wish I'd known that.
It is an irreverent podcast. I don't know how much of this we'll keep, but way to end us on a high note, JP. Hey, we want to give a shout out again to Redwood Logistics. Thanks so much for your support. Great to have everybody on here, and we are bringing it to you each and every week. As always, we go into more detail about each of the topics we've talked about today on our website, FreightWaves.com. We will continue to publish this podcast weekly, so be sure to subscribe to What the Truck on Apple Podcasts, Google Play, Stitcher, and SoundCloud. Also, make sure to leave us a review to let us know what you think of our new podcast. That'll do it for today. Thanks for tuning in, and we will see you next week on What the Truck.